Thank you, Catherine. Wonderful. All righty. All right. I see a few more people trying to log in here, but might be being some kind of issue there. All right. Take a minute or so here and read through the disclaimer, please. And we'll get started. Like I said, we have a very important topic tonight. It's all about the Federal Reserve. And that's because we have a very, very big meeting tomorrow. So we'll talk about that. Um, what that meeting can mean for you as a trader and as a citizen here in the US. This affects you every single day, whether you realize it or not. So, very important topic tonight. So, I'll give you another minute here to read through this one. Then we'll go through the next slide, which is also a disclaimer, and we'll get started. Okay, I have you all on mute to minimize the background noise there. All right, I'll go down to the next slide. Yes, David, we always have to show the disclaimer before every single webinar. Yes, Catherine, I understand. You got to do it though. All right, about another 10 seconds here, gang. So give you enough time to read through all that. Basically, all this is saying is that we are strictly education. We are not brokers. We are not advisors or money managers. We will not trade your money for you. We are strictly an educational service. That is it. All right, moving forward here. Now, trading foreign exchange. Those of you who know me, who've been to my webinars before, know that I always say that, hey, trading Forex is a wonderful way to add supplemental income or maybe even hopefully grow into being a full-time income. But it is not fly by night. It is not get rich quick. It is not some scheme. Okay, so if you came here for a get rich quick thing overnight, this is not the right place. Trading is hard work. It is study. It is discipline. It is education. It is being coachable. It is trial and error. Okay, it's all of those things. If trading was easy, the whole world would do it. Trading is not easy. Now, is it a realistic goal? It absolutely can be, depending on your level of effort. This is what we work for every single day, every single week here at TPL Forex. We take our clients by the hands and we hold them accountable. You have a stringent homework criteria you have to go through, a curriculum. You will be doing practice tradings. You will be watching live trading events with one of our coaches trading live. So you can watch over the shoulder of a seasoned trader to see how they trade. You have multiple ways to learn while we're building you into being a real trader. But make no mistakes, it's not some fly-by-night thing where you can start making money by, make $1 million by next week. That is not realistic. It is not what you should be here for. This is a real educational opportunity to learn how to trade the currency markets. Now, what is the currency market? Well, it's the foreign exchange, sometimes known as the Forex market, FX. Okay, it's where one currency is traded for another. If you've ever traveled to a different country and exchanged US dollar for the local money, you participated in foreign exchange. There's an exchange rate between those two currencies. So there's a value between those two currencies as well. So the need to exchange currency is the primary reason why the Forex market is the largest, most liquid financial market in the world. It's huge. It's over $4 trillion per day is traded in the foreign exchange market. It's huge, bigger than all the other markets put together. Now, every year you hear about in the stock market, insider information or insider trading. Well, in the foreign exchange market, there is little to no inside information. Exchange rate fluctuations are usually caused by monetary flows as well as anticipations on global macroeconomic conditions. Significant news is released publicly, so at least in theory, everyone in the world receives the same news at the same time, which is a very important thing we're going to talk about what's happening tomorrow with the Federal Reserve. Now, the foreign exchange market is open 24 hours a day. Basically, Sunday through Friday is the only time, Sunday through Friday. It's closed Friday at 4 p.m. Eastern Time to Sunday at 3 p.m. Eastern Time. Other than that, it's open 24 hours a day, so it's very flexible with many different trading hours you can trade. You can trade before work, after work. You can get up during the night trade. Whenever you want to trade, it's very, very flexible. All right, now there's no fixed foreign exchange market like you can go to New York and go to the stock market, right? Forex doesn't have that. It's between Forex brokers, brokers with banks, and banks with banks and individuals. That's where the market is traded. All right, now let's get into it. Tomorrow, we have a FOMC meeting. Now, stick with me here, guys. I've been asked to explain the Federal Reserve in detail because we have this big meeting tomorrow. So let me go to, if you look at our favorite website, Forex Factory, this is where we keep all of the important economic indicators, statistics, happenings, globally. All the important happenings are listed right here on this website, forexfactory.com. You should all have this bookmarked by now. I'll type it into your chat box here. And by the way, if you have a question, just type it into your chat box as we go along here. There it is. So you see, tomorrow morning at 10 a.m. Pacific time, 11 p.m. Pacific time, we have the FOMC economic projections, their statement, and the federal funds rate. And I'm sure to some of you that all sounds like Greek, and I'm going to do my best to kind of translate Fed speak into just, into the layman's level here, okay? Because it can be very confusing if we don't know, if you don't have somebody interpreting it for you. Now, a great website, gang, you can go to get all the stuff broken down for you about the Federal Reserve, who they are, what they do, how they operate, all those things, please go to federalreserve.gov. Typing it in for you. Okay, it's in your chat box now. Go to federalreserve.gov and then click on About the Fed. Under About the Fed, click on Educational Tools. Under Educational Tools, go to where it says, In Plain English, Making Sense of the Federal Reserve. Okay? That's very important. And they have a very, very helpful and very, very good presentation explaining all the things about the Federal Reserve in plain English. And it's very important stuff that you need to understand. I always cite the statistic that according to the U.S. Department of Health and Human Services, 95.7% of Americans retire dependent on family, charity, or the government. How sad is that? How scary is that? Go check for yourself. Go to the U.S. Department of Health and Human Services website, and you'll find the stat there. 95.7, let's just call it 96%, retire dependent on family, charity, or the government. That means only 4% of Americans retire on their own steam, on their own assets. How sad, how scary is that? And that's a big part of the reason why we do what we do here. We want to educate people to understand all the things that are happening on a global and domestic basis, because it affects you every day, not just as a trader, but as a citizen, as a consumer, just as a person. It affects you every single day. And if you don't understand this, my goodness, and my fear for you is that you're going to end up in that 96%. So I know we all have very busy days. I'm not going to take you through this presentation because it's very long. It's longer than the half an hour we have. But I strongly urge all of you to go to this Making Sense of the Federal Reserve in plain English. The reason why they did this is because so many people were complaining they had no clue who the Fed was and what they do. So this is a relatively new addition to the Federal Reserve website. Go there, go through it. It's a very good presentation. Gives you the history, tells you exactly responsibilities, all of those things. It's very, very good, and it'll help your understanding a great deal. Okay. Now, what does the Federal Reserve do? I'll give you a little bit. The Federal Reserve is the one who controls our central banking rate, otherwise known as the federal funds rate. Technically, it's called the overnight federal funds rate. Now, why is that important? Well, because everything else in the world that has an interest rate, whether it's a mortgage or a car loan or credit cards or student loans, anything and everything with an interest rate all ties back into that federal funds rate. And when the Federal Reserve raises or lowers that rate, if you're ever watching the news and you hear, oh, the Federal Reserve met today and they raised or lowered rates. Okay? This is what they're talking about. Now you know. It's the overnight federal funds rate. Because that's the rate that our federal banking system charges each other on short-term loans, usually overnight loans. And everything else with an interest rate ties back into that federal funds rate. Okay? So, as that rate goes up and down, so does everything else, which means things get either more expensive or cheaper depending on what happens with that federal funds rate. Now, you see right now it's at 0.25% right here. Now, it's been at that price for a very, very long time, 7-8 years now. The Federal Reserve has kept that federal funds rate very, very low. Why? Because essentially what they're saying is, hey, Americans, individuals, corporations, money is cheap. Get out there, buy a car, buy a house, use your credit card, spend. Let's get our economy going again. Let's pull ourselves out of this recession. That's why they kept that rate so low, which is why you've seen steep cuts in mortgages and car loans and credit card rates. They've all fallen over the last 5, 6, 7 years. So money's much cheaper now. And that's by design. You need to understand that. The Federal Reserve is doing that on purpose. Now, people get so crazy about presidential elections and congressional elections and all those things. And that's fine. You should pay attention to politics, in my opinion. But the Federal Reserve has a huge amount of autonomy when it comes to, and they're the ones with the real power over your pocketbook, your wallet, because they have their foot on the gas pedal or the brakes of our economy, gang. And more people need to be tuned in and watching what they're doing. It's crucially important. So, back to the federal funds rate. They've kept that rate extraordinarily low because they're trying to encourage spending to pull us out of this recession. Okay? So tomorrow at 11 a.m., the FOMC, which is a subcommittee of the Federal Reserve, is meeting. And you see they're going to be releasing their economic projections and their statement. And they'll be covering everything, gang, from interest rates to unemployment rates to trade balances to job growth to our GDP, anything and everything, every important statistic about our economy, about monetary policy, everything, and their forward-looking out projections as to how the American economy is going to be doing. Every single thing they're going to be talking about tomorrow. So I guarantee you the whole world, and I mean the whole world, will be holding their breath and waiting to see what the Federal Reserve is talking about tomorrow at 11 a.m. In fact, the markets, most of today, have been totally flat. No real movement up or down because nobody wants to be trading before they know what the Federal Reserve has to say tomorrow morning at 11 a.m. Pacific time. And that tends to happen before every Federal Reserve meeting, and the Fed meets about 8 times a year. Okay, so I'm hoping I'm conveying just how powerful the Federal Reserve is. They are all powerful, gang, when it comes to our finances and our economy. All powerful. And our government really has very few checks and balances over the Federal Reserve. And understand, the Federal Reserve is a private company. It is not the government. It is a private company. You should really understand that. Now, it is government funded, but it is a private company. All right, so let's get back to the presentation then. So, who exactly is the Federal Reserve? Well, the FOMC consists of the 7 members of the Federal Reserve Board and 5 of those 12 Federal Reserve Bank presidents. Now, what should you look for tomorrow? And I strongly urge all of you to go and read. You can find it on Forex Factory, or I'm sure it'll be all over the financial news tomorrow. All you have to do is check in with it. Any financial news, and they're going to have the summary of what the Federal Reserve has to say tomorrow at 11 a.m. Pacific time. What I want you to look for is that the committee was likely to strike or take out the word patience from its policy statement. Because the last time it met back in December, it said that they were going to be patient about raising that central banking rate. There was no hurry. Okay, so if they take out the word patient in their statement tomorrow, that could open the door to the possibility of them raising that federal funds rate in the next meeting in June. And if they raise that rate in June, you better know your mortgage is going to cost more money if you have an adjustable rate. The rates on credit cards go up. The rates on car loans will go up. The rates on everything with an interest rate is going to go up. Money's going to become more expensive to borrow. And that affects you every single day. So you need to understand that. So if the Fed raises that federal funds rate, money's going to cost more money. Borrowing money is going to cost more money. The price of that's going to go up. So if you're looking to refinance your mortgage or buy a car, you better do so before June if the Fed raises that rate. Now, we don't know if they're going to or not. And we'll, a little bit later on here, we'll talk about what we think is going to happen here, okay? So, watch to see tomorrow if it provides any other verbal guidance on the outlook for interest rates. Now, recently, a couple of weeks ago, Janet Yellen, who is the chairperson of our Federal Reserve, said that it won't start raising the federal funds rate until it's reasonably confident that inflation will move back towards the central bank's 2% target. So, inflation, the rising cost of goods and services, right? The Fed likes to see inflation at about 2% per year. That's where it's comfortable. That's where they think that our economy's growth can sustain 2% per year inflation growth. That's where the Fed likes to keep inflation, around 2% per year. Well, right now, it's only at about 1.2%. So it's below where the Fed would like it. So that leads to them thinking they may not raise the rate. Okay. What else should you look for? Well, in December, the last meeting, They forecasted the unemployment rate to be between 5.2% and 5.3% by the end of this year. So that's good news. So they see the unemployment rate to continue to drop. Now in February, the rate was 5.5%. Okay, so maybe they may even lower that estimate, maybe even below 5.2 or 5.3. They may lower that estimate. Okay, now if unemployment rate keeps dropping, then that argues that they may indeed raise the federal funds rate. Now, watch whether they lower estimates for the long-term unemployment rate. Watch for that tomorrow. Okay. Now, if they lower that expectation, they could be comfortable letting joblessness keep falling for longer before raising those rates. So keep an eye on that tomorrow as well. So keep an eye on the unemployment rate and what the Fed expects that to do. Now, unemployment gains have been bolstered, okay, for higher rates. Inflation has moved in the opposite direction, as I talked about. It's only 1.2%. Okay. Prices have been falling, actually. For example, oil prices have been falling sharply. You might have noticed that at your gas station. So the Fed is hoping that inflation will move up towards their target of 2% over time. So watch to see tomorrow how long they think it'll take that 1.2% to get to 2%. Watch for that tomorrow as well. Okay. Now, what had they said so far about raising the federal funds rate? Well, recently, Janet Yellen, our chairperson, told Congress the Fed would at some point drop its patient guidance and consider raising rates on a meeting-by-meeting basis. Well, guess what? The next meeting is tomorrow at 11 a.m. The vice chairperson said the Fed is getting closer to raising rates, but would not go on record about the June meeting. The next Federal Reserve governor said no comments on monetary policy. The next one said, well, I'm not going to speak directly about the June meeting, but in February, there's a lot of slack in the economy, and that he wanted to have confidence inflation was moving higher before supporting a rate hike. The next governor said, well, no comment. The Boston Fed president said that he supports a June move. Support for a June move would be doubtful, but he hasn't spoken directly on the issue. The New York Fed president has not addressed the issue outright, but he expressed caution about the risk of moving too early. The Philadelphia Fed president said, I'm not going to join the Fed until July 1st, so I don't have a comment. The Cleveland president said that she would support a move in the first half of this year, raising the rates. The Atlanta Fed president said that June should be the first meeting that a rate hike should be on the table for discussion. The Richmond, Virginia Fed president said, hey, I support a June move given the strong labor market. The Chicago Fed said, I would likely oppose a June move. The central bank should not be in any hurry to move with inflation being so low. The St. Louis Fed president said that, hey, I support a June raising of that rate. We're already a little bit too late in raising the rate. We should have raised it earlier. The Minneapolis Fed said, you know what? Low inflation outlook should keep the Fed on hold until later on this year. The Dallas Fed, well, he's retiring in March 19th, so he's not going to participate. San Francisco Fed president said June will be the first meeting that a rate hike should be on the table. So you see, even amongst the Federal Reserve, there are people who are for a rate hike and not for a rate hike. There's disagreement inside of the Fed because they have a very, very tough job. They have to strike a very delicate balance as to when to raise rates and when to lower rates. That's the foot on the gas pedal or the brake of our economy I was talking about earlier. They have a very tough job because they have to analyze data coming in, all those statistics coming in on a month-to-month basis. Because if they raise rates too fast and make money more expensive to borrow, well, people are going to spend less. And that could have a deep effect on pulling us out of this recession that we've been in. If people are spending less, we could fall right back into that recession and companies could struggle again, which lead to layoffs, which lead to more problems for all of us. But if they keep the rate low too far or too long, and inflation does pick up and move higher than 2%, then they have to raise the rate. So it's a very tough job, and you need to be on top of all this, gang. Because not only as a trader, tomorrow could give big moves in the market tomorrow. If the Fed does say, hey, in June, we will raise the rate, oh my goodness, the US dollar is going to take off like a rocket. It's going to get super strong because that will be interpreted as the Federal Reserve thinks the US economy is strong enough to withstand money being more expensive to borrow. Okay? If the Fed does nothing tomorrow, leaves the rate completely where it is, and says we're not sure when we're going to raise it, if we raise it, then the US dollar may go down a little bit. So understanding this stuff as a trader is super important to have successful trades. And we go through this all in detail. So don't worry if you didn't get all this tonight. I know it's a lot. I know it's all Fed speak, and it can be a lot to take in the first time you see all this. Don't worry about that. We go to it in detail in our private coaching. But please understand this stuff, because not only do you need to know it as a trader, but you need to know it as a consumer. Because like I said, if the Fed does raise that rate, guess what? Your money just got a lot more expensive. A lot more expensive. Okay? If you're an adjustable rate mortgage, your mortgage is going to get more expensive. Some car notes could go up. The interest rates on your credit cards could go up. You're going to have a lot of things happening. It's going to make money more expensive for you, and it's going to be hitting your purse and your wallet a lot harder in the coming days. Okay? So keep an eye on that tomorrow. Keep an eye on it. Go to the Federal Reserve website, the way I told you to. Read the statement they're going to release tomorrow. If you don't understand it, feel free to give me a call. I'll type my number in here, and I will be glad to go over it with you. There's my office number. You can feel free to give me a call. If you don't get me directly, I'll call you back. Most likely because I'm with a student. Okay? But I'll be glad to call you back and explain anything and everything you didn't understand in detail. Okay? All right. So you need to understand all this stuff, okay? And tomorrow's meeting, like I said, it's one of 8 meetings per year that have a huge impact on our economy and your finances, just as an individual. You need to understand this stuff. It's crucially important. All right, and you can see, coming back, you can see how in the last year and a half, how much the US dollar has gained strength across the board. So as our economy has recovered, unemployment has dropped from over 10% to where it is now, 5.5% in the last 4 or 5 years. And we can argue about what kind of jobs they are, part-time, full-time, all that. That's not our job, okay? That's the Department of Labor's job. Our job is to understand that data and see that, hey, the improving economy of the U.S. has led to the U.S. dollar strengthening across the board against all other currencies. Now, that's a good thing for us domestically, but also it's a double-edged sword. For example, when our dollar is super strong, that leads to our exports declining. Because when our dollar is strong, foreigners buy less of U.S. products because it's costing them more in U.S. dollars. You understand? So, for example, like Microsoft and a few other companies have already gone on record saying, hey, we expect our 2014 numbers to be lower on our exports because the U.S. dollar has gotten so strong. All right? So all these things are interrelated, gang. All of these things are super important for you to figure out. Super important for you to figure out, okay? If you don't know, give us a call. We'll be glad to explain it to you. Even if you're not a client yet, we'll be glad to explain it to you, okay? All right. Whew, that half an hour just flew past. All right. I hope you learned something tonight. I know it was a lot. I know it was kind of complicated, but this is important stuff in light of tomorrow morning's news. You got to know this stuff. feel free to give me a call. I'll be glad to answer your questions to make it all plain and simple for you if you don't have, if you just don't understand what's going on tomorrow, okay? So, appreciate your time tonight. I know you have many other things you could be doing. I'm very glad to see you here, trying to learn something about your finances and what's happening in the world. So, of course, we hope you join us for our private coaching. Catherine, will I be trading tomorrow? I will not be trading tomorrow morning before the news at all. I might be trading during the FOMC announcement if it's very clear guidance. So you can check in with me tomorrow morning, Catherine. Catherine is one of our current students. So Catherine, check in with me, about 15, 20 minutes before the FOMC announcement tomorrow at 11, okay? And question is from David, where again will that Fed statement be? David, yes, the Fed statement will be on their website. So if you want to go to federalreserve.gov, go back here. It will be under recent developments here on the federalreserve.gov website. You can read it there. Or if you want to go, it'll be under FOREX Factory as well. When they have their statement, you can click on more details and you'll be able to read it here under related stories. It'll have a link there detailing exactly what was said. Okay. All right. So, fantastic. I'm going to end the recording here. Okay.